In this video today, I'm going to teach you exactly how you can trade volatility 75 index by using break and retest strategy. So if you have been struggling with not getting exactly what to do, or you don't have a specific strategy, I would like to request you to stick around with me up the end so you will understand how you can trade volatility 75 by implementing this break and retest strategy. So it's easy to use to implement it. Just stick around with me up the end. But the only thing what you have to do to get a pen and paper, or you can save this video for another time. When you see that you have gone outside of the strategy, you can recap it and then you know exactly where to start from. So when you are trading volatility 75 or any kind of asset, what you have to do, we all start by looking the trend direction. So why we need the trend direction? The trend direction, it always helping us to identify the more big picture, to know where exactly the market is heading. Are you getting the point? When we know the market where it's going, that is our key point to start trading when we are going the same direction of the market. So to identify the trend is going to be our number one step. So how do we identify the trend? It's very easy. We identify the trend by looking the trend movement or the characteristics of the price. So this is how we identify the trend. Almost when the market makes the high highs and high lows, this tells us this is a trend. Are you getting the point? When the market or when the price is making this the high highs and high lows, these are the forming the trend. So that is the way how the market is moving when it's making the high highs and the high lows. Are you getting the point? So when the market is making the lower lows and lower highs, this is what also a moving trend. So we always have three trends in the market. We have the down trend and we have the up trend. Those are the two trends what we always to use when we are trading the market. So if this has not happened, we don't need to trade the market. We also have another trending market, what we call a ranging market. You can see around this area now the market is not trending, is arranging. Why? Because it's making the equal highs and equal lows. When the market is printing the equal highs and equal lows, that is what we call a sideways trend. Do we trade in this? We are recommending you, when we are trading, we don't trade to this because it needs a lot of experience when you are starting, unless if you are a pro trader. When you are just studying to trade, you don't need to trade on a ranging market. But when you are a pro trader, you have to trade on this ranging market and you catch pips, which means you are going to be using the scalping strategy when you are trading a ranging market. So I don't highly recommend if you are starting trading so that you can be interacting with the ranging market, because it will be hard for you to get the specific trades. Are you getting the point? And the risk to reward ratio, it will be very, very low. So we have seen the way how we identify the down trends and the up trends. So let us go to see how we can mark our down trends and the up trends. Now we see right now the market what is doing. We see our current here now, the price is moving the upward. Are you getting the point? It's printing the high here, high low, high here, and here we have low, and then we come here, we made a double top. So these are double top. They are saying us that the market, it have tried to do what? To break this area here, and it have failed. So when this happened in the market, there are two things now we have to win. Now though the market is on uptrend, and make sure And another thing, guys, what you have to do, don't do your market analysis on the low time frame. You have to do this market analysis on a high time frame when we are trying to identify the direction of the market. I recommend with you guys to be starting on the daily time frame if you are looking to be trading on a daily basis. Are you getting the point? Unless you are going to swing. So I recommend to you to use what? A daily time frame. So now we can see that the market is trying to make the high highs and the high lows of the market. So now it is a daily time frame. Now where do we are? We are at around this area. So if we can mark this region here, you can see that we have what? We have here our double tops. So we see the market, it have break this area here down. You see it have broke this area. When the market broke this area, we came back to make a retest. You can see when we broke this, we came back to make a retest. So if we can see that the market have moved up like that, so you can see that the market didn't come to break this down. So if the market could break this area here low, if the market could break this area here, we could say that the market now have changed its direction. It's moving the downward and to the upward, even though we have these double tops around this area. So we have those tops, but they are not saying that the market it have changed its direction, because we are still having here another key level here, which is not been what? Which is not been broken. You can see it right that. So where do we now we have to trade from? This is the area where we have to focus on now to look for the what? To look for the setup, because you can see that the market made a high here, made a low, and then we made a high. We broke this structure, which means this is our high here and this is our low, which means if anything can happen around this area, so that if anything happen can this area here, we have still look for the buys until this region here got broken. If this area has not been broken, we have to still looking for the buy opportunities. Why? Because this is our low here and this is our previous high. Remember, the market is moving the upwards. Are you getting the point? What we have to do, we have to go down to the low time frame and then we look for the buy opportunities. Are you getting the point? So you can see that the market came and respect this area. Why? Because here we have a strong key level here. Are you getting the point? We have here a strong key level. Remember, so when the market it breaks above, when the market it breaks above, you can see that when the market came here, we made a low here and we made a low here, and then we made a high. We break the structure. We came to retest any level here. You can see that this area here is the one which was what retested this one. When this area got retested, that's what we call a break and retest. Why do we call it a break and a retest? You can see that the market it broke. When the market breaks this area here, it become what? A support. Are you getting the point? So this was a resistance. So when the market have come down again like this, so it have become a support, and then it can reach any level here, so to be supported and move up. And that is exactly what happened. You see that the market moved upward very well. Are you getting the point? So when that happened, so what we have to do, we have to drop down to the low time frame and we start looking the opportunity after the market getting retest this area here, and we go up. So we want to get exactly key levels where to know where the market could be reached and then move upward. We have to use the Fibonacci retracement. How do we measure? How do we use it? We just this area here where the market have started from and where it have ended from is when we use our Fibonacci retracement like that. So and then we see exactly where the market will come. Let me adjust this Fibonacci. I've finished to make this adjustment. You can see that if the market pulls back to the 50% level, that's what we can call a golden key zone. You can see that at least the market have to pull back between 50 and 7.8. Are you getting the point? Or 61.8. Are you getting the point? So that will be what the good area to start looking for the buy opportunities, because if it is above, the market will be still on high price, that which means it's still expensive. Those people who are willing to invest in it, they will lead the market to drop down until it reach on the low prices, which means starting below the 50%, then the market will be very cheap, so anyone can invest in that asset, or anyone can buy that asset. So if the market come to those areas, what you have to do to look for the opportunities, so that you can raise up the market. So after identifying those key levels in a Fibonacci tool, you have to drop down to the low time frame, and then you start looking the opportunities. So we are going to focus about this area here, when the market dropped down like that, and then we look at the opportunity here, and I show how you could get them. You can see that the market exactly now, it is below 50, and it is above 70 percentage, which means we have to look the opportunity here. And another thing, what we have this key level here area. So this key level area, which means we broke this one area here. Remember, this is the daily time frame, and then we have come back to make a retest of it. So all of those are the factor key levels that will lead us to keep looking for the buys. Remember, we have a lot of key levels where we have to be looking to see that we can keep moving the price upwards as the way how it moving. All right, so let us drop down to the low time frame. So now this is our H1. So when we have come to the H1, remember we get all of these analysis on the daily time frame, and now we are on H1. So you can see that the market, it have come back to our key level, what we got them on a daily time frame. So when we see that, remember we are looking for the buy opportunity, and we have to go with the market. We have to also to wait the H1 to change its direction from the low to the upward. So H1 as is making the lower lows and the lower highs, we have to wait also shift from the lower lows and the lower highs, we start making the high highs and the higher lows. This, which means that this area, when H1 break it, we wait to come to make it a retest here. So if this happens and then we get the confirmation here, this will show us that now the price has starting moving the same way as the high time frame. So if we can see here very well, you can see that the market, after hitting to our key area, the market came, made this here. This was a high, if you can see it very well. This was a high here, and here we have a low, and here we have a high. We have to wait the market breaks this area. Are you getting the point? So the market continued and made here a low here. After making here low, we made another high here, and then we continue, made a low here. After making that low here, the market came up like this, and we break this lower high here. After the market breaks that low high, we have to wait to come back and make a retest. You can see that when the market came back to make here a retest, so, and then it moved all the way up. So that is how the market did. Are you getting the point? So if we see that after seeing that happened, are you getting the point? So what we have to do to look for the patterns, and then I have removed our key level. So identifying that we have to get our pattern. You can see that this area is which was broken here. Are you getting the point? This was area which got broken. After that area get broken, we have to wait the market come back and make a retest. We can also measure it with the Fibonacci tool as well. Like here, we start from here low up to the up, and then we look exactly below the 50%. You can see now the market came back very well, and we be between 50% to 70% in the middle there. Then remember, this is H1. So if this happens, what we have to do is when we implementing the candlestick pattern. So the candlestick pattern here, we have this one, we have this one, and we have this one. Also we have a double bottom confirmation. So but remember, this was the first leg to enter to this golden key level here, guys. So if this was our golden key level and then the price entered here, we have to look at the candlestick pattern here. We have this what? This a candlestick pattern. You can see this one area, and we have this also the bush engulfing, and we have this what? Put this candlestick pattern in the comment. Are you getting the point? And also we learn together. So you can execute from here, or you can execute from here. Are you getting the point? So those was the candlestick patterns that you can use them to execute the market. So you can see that after all of that happened, and then we executed here after getting our that key candle confirmations exactly there, we execute stop loss below of that candle or below of the key level, and then we target 1 to 2 or 1 to 3. You can see that the market move very well, and then it hits what? It hits the TP. Are you getting the point? That is the way how you can trade this volatility 75 index by using break and retest strategy. I have shown you all what you need to be implementing so that you can make money with the ease. But it doesn't mean that you over risking or you over leverage, because you have seen the way how this works. Are you getting the point? Success, it does not become an overnight. It's a long game, a long run. What you have to do to be patient and always follow your strategy. I want to assure you that that strategy, what you have been using for all along, you think that it's not working, it's working. There is no a holy grail trading strategy. Only what you have to be, it is to be with you discipline. I have shown you that this strategy, which means it will not hit stop loss. It can hit stop loss. That's why we say that you have to use stop loss. Does this strategy work for the small accounts? Yes, you can work small account and we can grow. So now, for example, you have a $100 account. Now we are going to lose $20, and then we make $60. Don't you see? That is the only thing where you have to implement. So if you have got value from this video, go on and hit that subscribe button. Are you getting the point? And make sure to share it with other fellow friends, students, and make sure to share this video with other fellow traders. And if you hit that like button, it will tell the algorithm of the YouTube so that other fellow traders, it can be learning from this video. And if you want me to master you directly, make sure to go in the pinned comments there. You follow the prompts and don't forget to leave your comment there. I will be able to answer you. That is the way how only we can communicate. And if you want to join my free Telegram group, also the link is going to be there on the description below. Make sure to watch that another video. See you to the next episode. Peace.